Hey everyone, we're live here with another monthly update with Mitch. And Mitch, I don't know about you, but it seems like we went from all the wind here for the spring to Phoenix, Arizona, and 150 degrees, it feels like. What's happening here?
I don't know. I don't want to get political right out of the gate, so we'll start with things are shifting, and along with the real estate market, so is our weather. They're
Yeah,
going hand in hand. I have a feeling one's really hot, and the other is kind of become a little more mild.
yeah.
So,
Without a doubt. So, we were talking about ideas for this month's episode, and you and I had kind of talked on these programs before that your company now has put together, or your investor group.
mhm.
So, some of the challenges folks have been seeing in this real estate market have been, well, you know, how do I compete necessarily with multiple offers? Sometimes they're cash offers, or gosh, I've got a home I've got to sell. How do I get into that next house? And some of these problems persist no matter what's going on in the market, right?
Right.
Just because things are shifting and maybe slowing down doesn't mean multiple offers aren't being had. When I bought my first house in 2008, it was a by far a buyer's market. I looked at 80 homes, I think it was, and the house that I ended up buying ended up with multiple offers. I just happened to be the one that won out. So, talk to me real quick about some of the first program that you wanted to talk about, which is kind of maybe the bridge loan option.
Sure. And just to piggyback your comment, we are seeing the market shifting in a way that there aren't as many offers, but there are still, to your point, multiple offers on the really well priced and really well positioned properties. And there are still cash offers winning in circumstances where someone else may have financing or a contingency on the sale of their current home.
Yeah.
And that's where we're seeing the benefit of this program. I still think it's extremely timely to utilize, and I'm going to talk after we explain the program, another real nice twist of this program that has come into play quite a bit to help real estate community create transactions for their buyers or sellers, which is the goal of this program. So the program has two different options. We'll talk about, and you had mentioned the bridge. I'm going to start with the first one, the cash purchase first. It's a little bit simpler to explain. That will guide us into the next one.
Yeah.
So if you're a buyer and you don't want to come in with whatever contingencies you might have, whether it's getting a new loan or getting gift funds or doing what other type of features you need, you want to be as competitive as possible. This program, the way it works is we have a third party entity. You mentioned investor. It's a local company that creates relationships with lenders. And what they will do is they will be the purchaser of the property that our buyers have determined what they want to purchase. You, as their realtor, will continue to be their realtor. You'll represent them, but they'll be the purchaser of that property on behalf of our mutual buyer. And so they'll make an offer in cash. In that offer, there will still be some contingencies around doing an inspection and any kind of resolutions to that, because they don't want to own this property ultimately.
Yeah.
They want this property to be resold to our buyer. So they will make that cash offer. You'll help in putting that contract together and submit the offer like any other traditional transaction. And that typically closes within about 2 weeks.
Yeah.
So now this entity owns the property. And prior to that offer being made, our buyer, who I've been doing the mortgage with, must be fully approved before that offer can be presented in the very beginning. So we have a completely underwritten, ready to go loan approval for this very specific property at that time, because they're eyeing the property they want. So the company who's buying it has full confidence that a mortgage can be made when our buyer buys it back from them. And so that's the next step, is now that entity owns the property, our buyer comes in with our mortgage that we've got completely done, with a contract from you, another contract to purchase it from the entity. Oops, sorry. from
The
one of
motion
those
sensors, Mitch, you're not moving
clap on,
enough.
clap off. Yeah, that's funny. Um, so you will then write the second offer to buy the property back from the entity that's currently owning it, and we provide the financing. And the goal is to close that transaction within roughly 2 to 2.5 weeks on the new purchase. So all in, it's about a month transaction, and there is no contingencies whatsoever on that initial purchase for cash, other than the inspection, and that's proven to be very successful.
Well, and you touch on a couple of things here that I want to talk about from a home buyer standpoint. If you're in a position to be able to give the seller a lot of options, from limitations on appraisal. We talk about closing the date that they want. Sometimes sellers want to close very quickly,
Right.
and sometimes they're looking for a little bit longer, or they're looking for something specific. Well, a cash option gives you a whole lot more flexibility as a buyer to give them what they want, so that you could in turn maybe negotiate down a little bit more on price or some of the other terms that are more important to you on those other things. You're like, hey, I'm going to give you all these things because I can. So, then what else can I get there in return?
Correct. And that was very prevalent in our previous market not that long ago. So for sure, let me move this out of the way here. There you go. For sure, those negotiating tactics are still very viable, even with a cash offer. So if you want to get your offer to the top of everything, the least amount of contingencies or items to address in the contract from the better. But there are going to be some that are required with this cash opportunity purchase for sure.
Yeah. Yeah,
So,
for sure. Some, right?
so
Because
that
somebody's still fronting the money for it. So it's,
correct.
how do we line things up so that, this still kind of works out for everybody?
Exactly.
Yeah.
Part two of that same program would be what are the fees involved? Because that's important to understand. And there's really two fees. One is a 1% charge to the buyer of the cost of the new home they're purchasing for the convenience, lack of a better word, of this entity purchasing the property on their behalf in cash.
Yeah.
So if they're buying a $600,000 home, the cost will be $6,000.
Yeah.
In addition to that, there's going to be the cost of however long it takes for the buyer to close on the repurchasing of that property from that entity who purchased it for cash. And that's what we're calling a holding period.
Yeah.
And the holding period will be charged by the day. Right now, it's averaging around, on an interest rate standpoint, around 6%. So if you took 6% of the price, divided it by 365 days, that's how much money it would cost per day for holding. So let's say that's $1,500 to $1,800 for 2 weeks. That would then be an additional amount of money the buyer has to provide at the time of purchasing that home back.
So we're talking about $2,000 on top of that, roughly $1,500.
If it's a 15-day holding time, yeah, about $2,000. Yep.
Yeah. So with the $600,000 home purchase, we're talking about $8,000 for the ease of being able to get into the home, and get the best offer. Sometimes when you're negotiating with cash and you can give them all of the other pieces they want, you might be able to negotiate that down in the purchase price. Cash offers tend to get a little bit more favorable treatment when it comes to price negotiations.
Correct. And the ease of closing and the speed of closing, to your point. Yep.
Yeah. So for context, we were working with a seller here recently that had a really, really short time window, and he took less money. I actually told him, I said, hey man, I think I can get you a lot more money. If you just give me a couple of days, right? It wasn't even a matter of weeks. He's like, nope, it's everything that I want. It's in the time that I want. Let's take this and move on. I said, okay, we'll do it. I mean, you're the boss making the decisions. I'm just letting you know what we can do. So.
Yeah, great. Yeah, and it, again, it's every scenario is different. Every transaction will be different on the needs of both sides, for sure.
Yeah. So it's not hey, every time it works out this way. It's hey, we've got this opportunity. Can it leverage to get less money on the purchase side to offset what it is that you're spending?
Correct. Yep. The other item to discuss on this, which will be the same for both this program and then the other one we're going to talk about next, is the buyer is required to front at the very beginning of the contract with the entity for the cash buy of 2.5% of whatever the anticipated price will be. And when they put that 2.5% money up front, the company that bought the home will pull from there the 1% fee and the holding costs, and then any funds remaining in that account, they will refund back to our buyer at that point.
Yeah.
They just are holding that in case things get postponed. And hopefully, and so far I haven't experienced it, and neither have they, because I asked these questions of them, is, well, what if between the time you own it and the 2 weeks we need to close, something happens where the buyer doesn't qualify for their new mortgage? And they said, we understand that's a very possible, a small chance, but it is possible. That's why we built in a little extra funds for that holding period, just in case they then need to find a new job. If, let's say, they lost their job totally unexpectedly.
Yeah, no fault of their own. The company downsizes and poof, their job's gone, right? I mean, anything could happen. Yep. So, what does that look like? And just as a buyer, knowing that going into and being prepared for it.
Sure. And in that case, they did say one happened that way, and it took the gentleman 2.5 weeks to get a new job, and then they closed about a week after that. So still bought the home, just was a little slippery during those 2 weeks of trying to find a new employment.
Well, and right, for perspective on that again, Mitch, if it takes typically 30 days, 40 days from contract to close, that person probably lost their job during what would have been that time frame. They would have lost the house.
That's correct.
Right? Because now they don't qualify. We're gonna have to wait a couple of weeks and see, if you get the job and then try to extend. Most sellers aren't going to wait and say, yeah, we'll wait till you find a job and we'll just give you that extension. We're just
right.
No, we're
That's
going to
a high risk proposition. Yep.
Yeah. So, it sounds, on the buyer's side, right, on the surface, well, maybe this is a little bit more risky. It's actually more beneficial when we take a look at what that looks like, to be able to close quickly and then make sure, hey, if something happened, we've still got opportunity, right? Because
that's correct.
The investor group, right, this program, they're not looking to just sell it to anybody else. They want to sell it to, Joe, who they had the contract with.
That's correct. And they're very, very adamant about that in all the meetings that we have together, and when they'll communicate with the buyer and with you and how it all comes together. But that is their intention. This home in their eyes, must be sold to that buyer as long as they can buy it.
Yeah, for sure.
So good. So kind of three things: the 1% upfront cost, the holding time frame, and then the 2.5% deposit up front at time of contract to start having them buy cash offers for the buyer. Those are the three numbers. Second option, they're calling a modern bridge loan. We all call it bridge loans, but it's really, there's a old time in the past bridge loan, which isn't utilized anymore today, which is why I think they put the word modern on it, which makes sense because a lot of people think, oh, it must be the old one, and it's not. So what the bridge loan option, or the modern bridge loan option, is if somebody has a home to sell and they want to purchase the next home before they sell their current home, and they don't want to make offers on the new homes as being contingent upon the sale of their home, this program fits in perfectly. So how it'll be structured is exactly the same way. The investor will purchase the home for cash and close on it, while you and your seller, who's also a buyer, will be getting their home ready to go on the market. Bless you.
I muted it, so you just got to see it. At least I timed it well, didn't blow the sneeze.
You timed it perfectly.
The microphone.
It shows you are human, Matt.
Without a doubt. Anybody that knows me knows I am human and flawed for sure.
Through and through.
Yeah.
So make some non-contingent, and then you and the sellers will be preparing their home to sell as quickly as possible, because the faster and the sooner they sell and close on that home, the faster that they can close on the property they want to buy, and that holding period will be reduced based on however long it takes for you to sell their home. And so the benefit of that program, same thing, is cash offer, not contingent upon the sale of their home. Ultimately, when they sell their home, then they'll get their equity out, use that as the down payment, and we'll provide the remaining amount of money needed for the mortgage to bridge the difference between the money they have for down payment and their purchase price.
Yeah.
And that program, the difference there is instead of a 1% fee, there's a 1.9% fee for that, and the holding costs. And that would be the fees to the seller and now a buyer for the property that was purchased on their behalf. And that is that scenario.
Well, and sorry if I had to be outside. My wife's expecting company. I had to work from home today. So if you're hearing the airplane, that's what it is.
Cannot hear the airplane.
Oh, perfect. Because it feels like it's right about this time we start getting airplanes flying overhead. So on that, right, if we're able to negotiate on the buying side because we're buying cash and maybe save some money, the best way to maximize profit when it comes to selling a home is it's vacant, nobody lives there, and it's staged. So, again, theoretically, and I've seen this work in real life, you can make up some or all or even more of the difference of this convenience of not having to buy contingent with what you can negotiate down and then what you can sell yours over what you would have, while you've got, your young kids and the dogs and the, cleaning it up and keeping it upright, right, as you're just living in it. Right now I'm thinking about my life. If I was going to move, Mitch, we've got a 3-year-old and a 6-week-old, and we've got 2 dogs. Like having folks come through the house would not benefit us when it comes to selling it, right? So I'm absolutely looking at a program like this to where I can maximize the value of what I can sell for my house.
Correct. And with the market shift, the other piece I'm waiting for an answer back, so I wanted to bring it up anyway, is can you negotiate on your buyer's behalf for the cash purchase to see if a seller would actually pay those fees, the 1% or the 1.9%, and have that be built into some portion of that transaction? And they're looking at it right now. They hadn't had that question asked, they said, and because the market wasn't that kind of a market, so it never came up. And now that it is, I have a feeling there's a way to build it in so that when our buyers buy the home back, they will see that credit filtered through from that first seller at the time of that purchase, the cash purchase.
See, Mitch, I love these conversations with you because you look at things oftentimes the way that I do with, hey, how do we structure this to get somebody else to pay for what I'm trying to do? So normally if there's a loan involved, you're going to look at seller paid concessions, right? So I just have to read the verbiage to see if there's any restrictions on seller paid concessions as it relates to a cash purchase. That's a good question. That's something that out of curiosity right now I'd have to look into.
Right. I'll find that, and I will find that out and let you know.
Yeah.
And the other side of this, as you and I talked about yesterday before preparing for this today, is if you were a listing agent and you had a home for sale and another realtor brought up a contract to purchase your listing, but they were contingent upon the sale of their buyer's home, you could now introduce this option to them to help your seller sell their home to a cash purchase. And then the buyer goes through the same protocol we just talked about earlier.
Yeah.
But so you're creating more opportunities for that.
On that note, because I work with more sellers than buyers just as a percentage of my business. Still love working with buyers, right? It just happens to work out that way with the percentage. So now a lot of times I think it's more the agents than the buyers themselves, but they're kind of really tied to that lender. Does that buyer's lender have to use you as the lender, or can they stay with the lender that they've been working with?
They would have to shift.
Cool.
It would be
it works with me, Mitch, because I know you're going to get it done and you're top notch at what you do. That's not always the case with other lenders. So, that works for me. Just want to know as I prepare to have that conversation.
Sure. And we've done a couple already. So in given that strategy, and it has helped everybody make a transaction they ordinarily may not have been able to do.
Well, I think if I could tell the other agent, hey, your client has the best offer outside of this contingency. If they look at this program and switch lenders and work with Mitch, who's phenomenal, by the way, you probably win. Are you open to it? My guess is you're probably going to see some people say, yeah.
Yes. And they have, and the conversation, at least it starts another conversation of a option that their buyer didn't have previously.
Yeah, for sure.
So it's created 2 transactions. So it's great so far.
So one question on that as well about, the holding cost.
Mm-hmm.
So that's paid for out of the fee that's up front, correct?
That's out of the 2.5% initial deposit. Correct.
Okay, cool. So now what if they get kind of beyond that time that's been budgeted for in that?
Yeah, they'll come back and talk about further deposits.
Okay.
For that holding time.
Cool.
Yeah, I mean, their goal, again, the market being what it was, that they basically planned for a 60-day transaction on the sale of their home to complete the new purchase. But they know with the market shifting, they'll be open. Well, they know that it's a possibility it could take longer, or they'll have conversations with the listing agent and say, where are you guys at with this? What's your strategy? What are you doing to make this home saleable? Because the goal is we got to get it sold as quickly as possible. And so they're taking on quite a bit of risk, for sure.
Yeah, without a doubt, right?
Yeah.
So, as we look at that scenario, Mitch, and you've been in the real estate industry on the mortgage side for a long time, been doing this a while. The market goes up and it goes down, right? We're still in a seller's market, in a buyer's market. If the home is priced correctly for its amenities, its location, its condition, it's going to sell quickly. Even in an extreme buyer's market, even back in 2008, 9, and 10, right? The right pricing strategy still got homes sold quickly.
Correct. Yep. And it always will be. There's always buyers and there's always sellers. It's where's the balance or imbalance? And we've had the imbalance for a while where not enough sellers, not enough inventory, more buyers. And now we're seeing that balance out somewhat.
Yeah.
So, yeah. And so without a doubt, if people need homes to buy, when they do, they're willing to pay for the home that meets their needs.
Absolutely. So,
Yeah.
right. Pricing it correctly really matters.
Yes. As well as affordability for our buyers. So we make sure they can afford to buy that home as well. And that,
of course.
together. Yep. Yeah, sure. I always bring it out. That's how I wake up every morning, is I want to make sure my clients don't ever call me to say, I can't afford my payments after the first 2 months of being there. So
not unless something dramatic happens
Right.
that was outside of the control, right?
Exactly.
They lost their job at that point, can't
That's
afford
correct.
it.
Life
saying,
and things do happen, but out the gate, we want to make sure they're comfortable.
Yeah.
So,
well, Mitch, and always
yes.
looking out for what's in your client's best interest. That's just
For
who
sure.
you are at your core.
Yeah, for sure. And that's the right way to do it.
For sure. Yeah.
Yeah.
So any other pieces on those 2 programs that's relevant that we should know?
No, I think that the nice piece about it, or the nice parts about it, is that they're fairly straightforward and fairly simple to explain and understand. The details are in the contracts when that part takes place. So that's a little bit more work on our part, yours and mine. But very doable, and that's what we get paid to do. So it's not a problem.
Yep.
It's
a lot more work for me on how do I structure these contracts and look in multiple screens. Thank God for that, right? Looking, okay, what's the dates? How does this all line up? And okay. But Mitch, you and I, hey, we're happy to do the extra work if it ends up making the difference and getting somebody into the right home, the right situation.
Correct. And so the nice thing is it is fairly simple and straightforward from our buyer or seller's perspective. And simplicity is really important because everything is so complex often.
Yeah.
So that's the piece I would say is worthy of more conversation. If anybody listening or viewing today has questions about that program or anything else related to mortgage banking or real estate, we are both here, as you know. So that's what I would have to say about that program. Just a real nice option and a tool to have available.
Yeah, for sure. Well, I'm glad that you started this program and are working that direction, because it gives options for people to consider that otherwise are looking at it and saying, hey, I don't know how to move forward in this. I'm stuck in a house I don't like because I can't win in this multiple offer situation. So what's happening? Or, just life conditions, right? Kids, dogs, whatever. It makes more sense for me to do it this way, right?
Yep. And it's another option to consider for sure.
Yeah, for sure.
So,
So, anyway, that's it, Mitch. It's, like you said, pretty straightforward and simple, which is great because it's easy to explain to, potential clients. It's also easy to explain to the agent on the other side and say, here's where it's going to simplify your life.
right. Yep.
Awesome. So, Mitch, as we wrap up, any summer travel plans? Are you heading anywhere? Are you going somewhere cooler for the summer?
Well, not for the summer. Are going to be going to Santa Barbara for about 12 days.
Nice.
For till September, but I'm turning the next generation of age, so we're going to celebrate that. They're the next. We're going to celebrate not next generation, but
Mitch
next
is
10-year
40.
cycle. My next 10-year cycle in Santa Barbara, and have a fun party together. All my family still lives there, so we're going to all get together for a brunch and that. We'll
That's awesome.
where we're going, but otherwise we're chilling. We might hit the mountains for the weekend, some between now and then. How about you?
Well, with the 6-week-old, a lot of our time is going to be spent in and around the house. He's got to eat every 2 or 3 hours. And regardless of where we're at, his stomach's not going to change. He's not going to just be like, oh yeah, we're on vacation. I'll wait.
Exactly. No, he'll want more than.
Yeah.
Well, that sounds
sure.
great. I know it's a great thrill to have a new child in your life for sure. And I know you guys are great parents, and we'll continue to enjoy being a father and doing the things you do. And I'm sure you're looking forward to getting on the motorcycles with everybody.
Yeah, for sure. Well, Mitch, we had talked, I think, I don't know if it was last time or the month before, right? The last 2 months have been kind of a blur, but we talked about the Avalanche, and,
Yes.
I got a great gift here for my wife. Avalanche Stanley Cup
Nice.
champs here. It's a fun series to watch.
They couldn't have done it without you.
It's all me. I want my time with the Stanley Cup so I can hold it overhead.
Exactly. You earned it.
Yeah. No, Mitch, again, thank you as always for
well.
your time as you invest in this. It's always valuable information for me. I love these conversations, and the folks that are watching, I know that they get a lot out of it as well. So again, Mitch, thank you so much.
Thank you. Have a good rest of your day, and we'll see each other soon.
Sounds great. We'll catch you next month.
Thank you.